Markets and bazaars are older than cities, older than nations, and older than written law. Long before stock exchanges and online platforms, humans gathered in open spaces to trade what they had for what they needed. These early markets were not only places of commerce, but centers of culture, communication, and survival. To understand how trade evolves, we must follow these spaces across time, from the earliest exchanges to futures beyond money itself. In ancient societies, markets were temporary and organic. Traders gathered at crossroads, riverbanks, and city gates, offering food, tools, animals, and raw materials. Barter dominated, and trust was built face to face. Prices were negotiated through human interaction, shaped by reputation, scarcity, and social bonds. These markets reflected their environment, changing daily with seasons, weather, and political stability. As civilizations grew, markets became permanent structures. In medieval cities, bazaars and marketplaces were tightly integrated into urban life. Covered stalls, guild regulations, and standardized measures appeared. Markets became regulated spaces where economic power, religion, and governance intersected. Goods traveled farther, bringing spices, metals, and textiles from distant lands. Trade routes shaped cities, and markets shaped identities. With the industrial age came a fundamental shift. Large market halls, warehouses, and wholesale centers replaced many traditional stalls. Mass production changed the nature of trade, prioritizing volume and efficiency over personal exchange. Money replaced barter almost entirely, and markets became systems rather than gatherings. Distance between producer and consumer increased, and the human scale of trade began to shrink. By 2025, markets exist in multiple layers at once. Traditional street bazaars still thrive, offering food, crafts, and social connection, while digital platforms handle vast portions of global trade. Physical markets adapt by blending technology with tradition. Digital payments, logistics networks, and global supply chains coexist with human negotiation and local culture. Markets are no longer limited by geography, yet people still seek physical spaces to exchange more than goods. As we move deeper into the future, markets become increasingly automated. By the 22nd and 23rd centuries, many trade spaces operate through artificial intelligence, predictive demand systems, and robotic distribution. Human presence shifts from selling to supervising, designing, and curating experiences. Markets become quieter, cleaner, and more efficient, but less spontaneous. Exchange becomes optimized, measured, and controlled. Further ahead, around the year 3000, the concept of a market begins to transform entirely. Scarcity is managed rather than negotiated. Resources are allocated through planetary systems rather than bought and sold. Trade hubs resemble infrastructure nodes instead of social spaces. The idea of profit fades in importance, replaced by sustainability, balance, and long-term planning. By 3600 and beyond, markets are no longer places people visit. They are systems people exist within. Exchange happens automatically, invisibly, guided by collective intelligence and planetary needs. Physical bazaars survive only as cultural memory, preserved for tradition, ritual, or identity. Finally, by the year 5500, the market as we know it has dissolved. What remains is the idea of exchange itself, the movement of energy, materials, and information across a civilization that no longer defines value in coins or numbers. The evolution of markets tells a deeper story about humanity. As trade spaces change, so does our understanding of trust, value, and connection. From crowded bazaars to invisible systems, markets mirror who we are and who we are becoming.